We're going to do a video on gold price prediction, and we got a daily chart of the gold futures from COMEX here with a blue 200-day moving average. And as we can see, gold's been in a bear market ever since about June of 2022. We're going to do an analysis here with technical analysis, and then we're going to look at some other technical indicators, and then finally we're going to look at the algorithmically generated entry prices from RBAM Research and show you how to get those for free. So stick with us to the very end and we'll show you how to do that. Let's take a look at this real quick. We can see that the gold price put in a tremendous rally, came up from $1,618 all the way up here to $1,791. It's just an incredible rally, and you see that it just did not get to the 200-day moving average. So we're still in a bear market in gold. Gold sold off here all the way back down to $1,719 and is running into the 20-day moving average, moving up here. If we go to the weekly, we can see several things. The first thing we're going to look at is see that gold came down here to the 200-week moving average, the blue line, and kind of oscillated around it for a couple of months and then rallied up above it, and that was that big rally we got. Put in a new weekly high here at this 1791, and then dropped back down, and is closed this week above the 200-day, above the 5-day, and above the 20-day moving averages, which is that's all good. Closed to 1754-ish on this particular day. Today, Friday, it closed at 1755, but that close is below, obviously, this. We didn't put in a new weekly high, so that's a cause for concern, because you'll notice the green and the red moving averages, the 5 and the 20 weekly moving averages, are right together with each other. So I would describe gold here as a little indeterminate. Let's take a look at another indicator real quick and see if we can't come up with a better idea of what's going on with gold. We're going to do a linear regression of gold, and we're going to do a 100-week linear regression here. This is 100 bar, and this is a weekly chart. So if we come down here, we can see that gold is respected. This is fair value here in the middle. 2 standard deviations down here, 2 standard deviations here. We can see gold respected it right here, rallied up, not to the top, but close, sold down, respected it again, broke through up here a significant amount, but ultimately turned around and came back down, and then came all the way down and broke through, but respected it, and now put a rally up, and you'll notice right to fair value. So this point right here last week, not this week, this $1,791 was a couple bucks above fair value. Fair value was 1784-ish last week, and then we sold off. So we're not quite 1 standard deviation away from fair value now. So what needs to happen for gold to rally is gold needs to catch this bottom like it did this week, right here on this 20-week moving average, and then next week come back up. It needs to put in like a 2 or 3 week move up and sideways, and then begin to move up above fair value. So as long as gold can stay above this 20, and you can't see it anymore, I took the 5-day green away from here, but as long as it stays above the 5-week and the 20-week moving averages, and of course it's above the 200-week, then this gold's got a good chance of rallying up here to about the 1830 level. I'm not predicting that, I'm just saying that's what it looks like could happen, but that's not going to probably be possible until early January. Again, if gold breaks down below the 20-day moving average here next week, and then gets back caught up in the 200-week moving average, then you're not going to see a good rally in gold. I'm not predicting anything, I'm just going through it. Let's take a look at the daily, and again regress it, and you can see exactly on a daily chart we had respect for it here, here, and again here. So this, again, two standard deviations, 100 bars, but now on a daily chart, and you can see we ran right into this fair values here, ran right into this 2 standard deviation spot here and here, respected it, and sold it right back down. Now, interestingly enough, it's in just below the 1 standard deviation range here, but it's also bouncing up against the 20 on a daily chart. So it's a good sign that it's catching some support, and I expect gold to rally. Now, on this daily, you can see gold probably is going to run into resistance again at around the 1780 level. Right around in there, I would expect to see some resistance. The high this week was, it looks like 1761-ish was the high made today. So it's probably going to run into some resistance next week if it approaches the 1780 level, and it'll probably sell down. But that's what it needs to do. It needs to come across here and put in some time, as I said on the weekly chart, before it begins a rally. If it doesn't put in some time, it's going to get overbought, and it's just going to sell down again. If you take a look at our algorithmically generated entry prices from RBAM Research, we get on here and find gold, and we have it here for today. Today we had shorts at 1728, and that it never got that low to short it. We had shorts across the board, 1728 all the way to 754. 1754 did get hit, and 1754 was 5, 10, and 20 days. And you can see these start at 1-day holds all the way over to 20-day holds for gold futures for today. So some of these would have been profitable if you'd got in them you could have already gotten out of them and made a few bucks on the gold trades, all for entertainment purposes, all hypothetically speaking. You have to do your own analysis. Can't use our entry prices for anything other than entertainment, including my conversation and my commentary and our exact entry prices. But very interesting and entertaining to come and take a look at them every morning, and you can do that at 14-day free trial, no credit card required, at rbamresearch.com. Link in the description below. You can head over there and get algorithmically generated entry prices for 190 stocks, the major forex pairs, and the most liquid futures contracts, including gold, all updated by 7 a.m. Monday through Friday at rbamresearch.com. Keep in mind, everything is for entertainment purposes only. You always trade at your own risk. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment, please leave it in the comment section below.